Hello everyone, welcome to today's session. So today we are going to continue our chapter number 6. Before I proceed to the chapter number 6 further topic, I would like to ask if anyone has any doubt on whatever we have discussed till now. Any doubt? If you have, you can ask. Okay, and don't worry, no doubt is small. Okay, no doubt is silly. You can ask your doubts like if you have any doubt. No? No doubts? So all clear till now, whatever we have discussed. Okay. Can anyone quickly summarize what we discussed on subsequent events in the last session? Quick recap. Can anyone? Okay. No issues. I'll ask the questions, and by that way, we'll do a quick recap. Okay. Now, when we were discussing SA 560 subsequent events, what are the subsequent events as per the SA 560? What type of events and what things are covered in there? Anyone? What are the subsequent events?
Adjusting events and non-adjusting events.
Okay. Adjusting, non-adjusting. As per SA 560, what else is covered in that?
Sir, it is
Facts.
event which is occurring between financial
Events and
statement
facts.
and auditors reported.
Okay. Someone else also was giving the answer.
So I was saying events and facts.
Events and facts. Events up to which date? And facts from which date?
Events up to auditors report date and facts after the auditors report date.
Very good. Yes. Correct. Now, second, the question is what are the objectives of the auditor when it comes to these events and facts?
Auditor need to obtain sufficient appropriate audit evidence regarding events, like whatever the events for that, if it is adjusting event, for that whether adjustment is done in financial statement or not. And in case of non-adjusting event, whether disclosure is done appropriately or not in financial statement.
Okay. Very good. Yes. Now, we discussed one of the area where we discussed about that. Okay, if you identify an event which is before the date of audit report, okay, and which requires a disclosure, what will be, or you identify an event basically, okay, whose evidence or whose details were not available on the date of financial statement. Okay, now what will be your approach for the audit for that particular event? How will you audit that event, or what you will do as an auditor? What will be your responsibility for that particular event? Event occurring before the date of audit report, but no evidence was available as on the date of financial statement.
So then it will be non-adjusting event and only disclosure will be required because no any additional evidence was putting on financial statement date.
Okay, great. Yes, but as an auditor, what you will do? What are the responsibilities of the auditor in that particular scenario? What auditor is required to do? Anyone?
Sir, in that alternate to check like whether whether it is how much material it is and what impact is of this in financial statement, and in such manner disclosure will be required in the financial statement. And auditor will also report this matter in their EOM para in audit report.
He
Okay.
will also ask management also. Auditor will ask management whether they intend to disclose this.
Yes, absolutely correct. Very good.
Hmm.
So when we will identify these kind of events, first of all, we will ask the management and we will determine what is the requirement as per the financial reporting framework. Okay. We will understand like, okay, what is the requirement as per the financial reporting framework? Are we required to disclose this or are we required to, adjust this particular event? What is requirement? Discuss the matter, determine whether the financial statements need the amendment or not, and inquire with the management that how they plan to address this matter by way of a disclosure. Are they ready to change it? Are they not ready to change? What is their approach on this particular matter? And then if they change, then we may audit that particular portion and accordingly we may provide in our report. But if they are not ready to change, then yes, of course, the rest of the things, it is not complying with the financial reporting framework and it may result in the modification. Clear?
Yes, sir.
Great. Okay. So that was with respect to SA 560. I hope we don't have any further doubts. If you have, you can ask, and as and when I will receive, I will take up those doubts. Okay. Now, what we need to do is we need to go on to one very, very important standard, the next one, which is your SA 570. What is 570? What is going concern? Anyone?
Sir, in this, auditor checks whether company will run in a long run for the future or it is going to close in near future only. So that's why this standard is SA 570 going concern.
Okay.
So
So
check
you are saying that
continuity of the business. That is the thing.
correct. Okay. Fine. So the question comes is, okay, we are assuming that entity will be continuing in the future. Financial statements are made in such a way. Why? If I just let's say, for example, if the going concern is not present, what difference it will make in the financial statement?
Sir,
Nature of
in normal,
accounting will also change, na, sir?
As in, so when you say nature of accounting, like what it will change. Let's say, for example, going concern is not there. I'm saying not there. What difference it will make in the financial statements?
Then we will account for as per liquidation basis.
Okay, very good. Yes. So my entire accounting goes for a toss. Currently, I'm doing a cost based historical cost, but later on, when I say going concern is not there, entire accounting goes for a toss. And that will become very big problem. Are you getting the point? As a result, what is very necessary to do is to ensure whether there is a going concern assumption appropriate, the use of going concern assumption is appropriate or not. Now, second question to everyone is that whose responsibility it is to check for the going concern?
Management.
Management. Very good. Yes. Okay. So then what is the responsibility of the auditor? If it is the responsibility of the management, then what auditor has to do?
Verifying management's assertion.
Verify management assertion of of use of going
Going
concern
concern.
assumption. Okay, very good. What else? What is the role of auditor in this scenario? Apart from verifying management's assertion, what else we need to do?
auditor also will check is there any like uncertainty exists regarding the ability to continue as a going concern or not. So whether any uncertainty exists or not, that also will be checked by the auditor.
Very good. So now we are coming to a particular term which is called uncertainty. Going concern is there. Still, we are talking of a term which is called an uncertainty. Now, this is a term that we need to understand in detail. What is uncertainty? What it means? Because at times now we will be using this term frequently. When we will be discussing this, we will be using this term frequently. There are two terms that we will use frequently. One, material uncertainty. Okay. One, where the material uncertainty is there. Second, when you will talk about events or conditions that cast significant doubts on entity's ability to continue as a going concern. Okay, so let's start with that. The first term that I'm talking about is material uncertainty. So what is material uncertainty? Can anyone tell me? If you have read, what is material uncertainty?
Sir, it is such type of uncertainty, like there is a very high chances that entity is not going to means not going to perform as a going concern. Means there is high chances that it will get liquidated. That is called material uncertainty.
So can I say material uncertainty is equal to going concern not present?
So we can say that the event or condition that may cause the significant doubt about that clarity to continuously going concern.
Okay. So the question still remains the same. Is it material uncertainty equal to inappropriate use of going concern?
No.
That's the point. That's the main point we need to understand. Material uncertainty does not equal to that, going concern assumption which is being used by the management is inappropriate. Okay. And I will show you one example for that. So we already have one report with us. Let me open it. So that report we discussed in the past, basically, and it is kind of a area where this particular point was given. Just don't go on the name of the entity, and it's a publicly available data. So nowadays very hard to find these kind of reports where you get specific paragraphs on material uncertainty. Okay, see, last time we discussed on this paragraph material uncertainty relating to going concern. I'll just remove as of now. Okay, so let's read this paragraph for a minute. So what is written? We draw attention to note number 23 of the standalone financial statement, wherein the company has incurred losses during the current year as well as in the previous year. Excess of the current liabilities over current assets and loans that have fallen due for the repayment, and the loans which have fallen due of the subsidiary companies for which the company is a guarantor indicate that material uncertainty exists that may cast a significant doubt on the company's ability to continue as a going concern. However, for the reasons more fully described in the aforesaid note, the accounts of the company has been prepared as a going concern, and our opinion is not modified in this matter. Two things. When we are reporting this paragraph, number one, we are saying that, okay, there are conditions. So what they are saying, there are conditions that cast a significant doubts on entity's ability to continue as a going concern. So there are conditions and events that are casting significant doubts on entity's ability to continue as a going concern, and they are of such nature that it becomes a material uncertainty. Okay, so they are of such nature that it is becoming a material uncertainty that results into the material uncertainty. Now, material uncertainty not means that going concern basis is inappropriate. Why? Because there could be further reasons supporting that. And we will go to the note and we'll see what are the reasons why they are saying that, okay, even though there is a events and the conditions which are casting significant doubt on company's ability to continue as a going concern, still we are saying going concern is appropriate. So let's go to the note 1, note 23. And we will discuss the reasons because reasons are defined over there. Okay. So here we are, 23. What they are saying is company has incurred significant net losses after impairment of asset this much during the year, and its current liability exceed the current asset by this much lakhs as of March. Okay. The company is confident of meeting its obligations by generating sufficient and timely cash flows through time-bound monetization of its assets. Also realize amounts from regulatory and arbitration claims. Notwithstanding the dependency on these material uncertain events, the company is confident that such cash flow would enable its service its would enable it to service its debts, realize its assets, and discharge its liability in the normal course of its business. The company has been in discussion with all its lenders. It has been agreed by the lenders for a resolution outside the IBC. Accordingly, the standalone financial statement of the company has been prepared on the going concern basis. Means, although there are events and conditions which are creating issue, but what they are saying is that the company will be able to generate the cash flow through time-bound monetizations of asset, through realizing its assets and discharges liability in normal course of business by way of the amount that they will be receiving from regulatory or arbitrations claims. So they are saying that okay, money is going to come. As of now, we are in trouble. We know that, but money is going to come, and as a result, we don't think so that the going concern basis is not appropriate. So going concern basis is still appropriate, but the problem is that there are events and conditions. Okay, so events and conditions are not equal to going concern basis is inappropriate. The first thing that we need to learn, material uncertainty can be there, and the material uncertainty comes because of the events and conditions that cast significant doubt on entities ability to continue as going concern. Okay, material uncertainty comes from these events and conditions, but this is not equal to that going concern basis is inappropriate. Okay, so now first of all, the objective that we discussed was to validate this going concern basis, the management assertion of going concern basis. We need to validate this. The second objective of the auditor becomes that we need to identify whether a material uncertainty exists related to the events and the conditions that may cast doubt on the entity's ability to continue as a going concern. Because we already discussed that if we say going concern is present, that does not reduce the scenario or remove the scenario where events and conditions might not be present. So you can still have events and conditions with the going concern basis. So when we are saying going concern is fine, but still we have to check whether there are events and conditions or not. And because of that events and conditions, whether you have a material uncertainty or not. Clear?
Yes, sir.
So the objectives of the auditor are: number one, to obtain sufficient and appropriate audit evidence regarding and to conclude on the appropriateness of the management use of going concern basis of accounting in the preparation of the financial statements. Number two, to conclude based on the audit evidence obtained whether a material uncertainty exists related to the events and conditions that may cast significant doubt on entity's ability to continue as a going concern. Now, I will talk about few things that while writing the answer, students do a mistake. Now, when we use this term, for example, use of going concern basis of accounting in preparation of financial statement, most of the students write this as a going concern assumption. Okay. Or some write as like, only going concern. So in exam, when you are writing the answer, if I write like, okay, management is using going concern, it is inappropriate. I know what, most of the times we write, when we are writing the answer, we change the words bit based on our language. But using only going concern assumption, it's not appropriate. It will not give you that kind of, output. It has a different meaning to it. We have to write use of going concern basis of accounting, because when I say going concern assumption or going concern basis, it is going concern basis of accounting. It could be, somewhere else also, but we are specifically targeting the going concern basis of accounting in the preparation of the financial statement. That is a term that you need to use. Second, most of the time students write, instead of material uncertainty, they only mention uncertainty. Okay. Or they only mention that, okay, going concern assumptions, doubt over going concern assumptions. So these terms are used, but no, you have to use the appropriate terms, that is material uncertainty, and that is to events and conditions that may cast significant doubt on entity's ability to continue as a going concern. Do not change these terms and write like, okay, going concern basis, use of going concern basis. So do not write like this. No, everything has its meaning. If you change the terms over here, it will be a problem. So these shortcuts or small, doing small these terms is not appropriate. Clear?
Yes, sir.
Okay. So you can see, like, you can just remember these as a keyword. Do not change.
Sir,
Now,
mostly in all objective part, we need to write as it is, means in the book language only.
no, not only objective part, we will discuss at multiple places that I will use the same term, events and conditions that may cast significant doubt on entity's ability to continue as a going concern. I will use that, because if I change a single word in this, it will have a altogether different meaning. For example,
Yes.
significant doubt. If I only write a doubt, if it is not significant, then it might not come under the purview of materiality, and it may never go to the material uncertainty.
Okay, sir.
So everything, is the words, the way are written in this, the way are structured. There is a purpose behind it. Any doubt till now? Any doubt?
No, sir.
No. Okay, great. So now let's talk about practicality. On ground, how will you verify this? Let's say you are going for an audit. How will you verify these things? Let's start with first, the use of going concern accounting, going concern basis of accounting in the preparation of financial statement. How will you verify this? You are going for the audit. This is the task which is there for you. Now, how will you audit it?
We will inquire management whether there is any condition, such
Hmm.
conditions that indicate so that financial condition of the company is not appropriate, or there are certain operating restrictions on management, or they are there or no.
Okay. So you'll ask management about the conditions. Fine. What else?
So along with that, we can check in financial statement whether any contingent liability means related to contingent liability there will be disclosures, or legal expenses. We can see what are the legal expenses or not. Based on that, we can um, understand about conditions of company.
Okay. Contingent liabilities. You will assess contingent liabilities. Yes. Anyone else?
We will check expenses account whether legal expenses have been incurred, correspondences with the external counsel are there, whether any resolution is there.
Okay.
And also for current asset and current liability ratio, like what is the ratio of current asset and current liability?
Ratio of current asset and current liabilities. Fine. Yes. Very good. What else you will check?
We can check cash flow also, like whether cash flow is coming
Very good.
to the company or not appropriately.
Yes. Absolutely correct. See, what I will do. Okay. What I will do is, for example, when I will go, I will check for the events and conditions that are, first of all, if I want to use, if I want to verify the going concern basis, if I want to check whether the going concern basis of accounting is appropriate or not, I need to start from the bottom. The first thing is events and conditions. I need to pay attention to those events and conditions. Simple example. Simple. Let's say someone has a fever. Okay, someone has a fever. Now that fever is an event or condition. Symptoms are there already. Now that symptom can result into something bigger and behind, or might not be. But I have to look for those symptoms, whether there is a fever, there is a cough, there is a cold, what is there. So these symptoms are the events and conditions that are casting. If you have a continuous fever for 1 week, 2 week, 3 week, it is a significant doubt, because it is creating significant doubt. These events and conditions, this condition of fever is creating significant doubt. So I will focus on these kind of conditions. First of all, once I will focus on these kind of conditions, symptoms kind of thing, okay, the fever I have identified, fever is there, then we will go for detailed understanding, detailed investigation, not investigation, but detailed evaluation of that condition, why it is there, what is the reason of that particular thing. Do you think it is going to be there for a long, or it is going to go away? Okay, the final diagnosis of that particular why it is there, that why will give me answer about material uncertainty. That why give me answer about material uncertainty. And based on that material uncertainty, I need to decide, okay, whether the going concern basis is appropriate or not. See, material uncertainty is kind of a red flag. Now, to remove the red flag, or to balance out the red flag, you need something more. For example, cash flows, support, some other things. Okay, things are there which are very bad, but yes, the treatment is this one. If I apply this treatment which is affordable by the company, fine, we can balance it out. But tomorrow, if I say yes, these are the particular problem, but there is no treatment available with the company, then gone. So understand like this way: events and conditions are the fever. When I talk about material uncertainty, something bigger, coming up behind when you investigate or when you do a test reports of that fever. Okay, now for that something bigger, if you have treatment, good. You may say that, okay, entity's ability to continue as a going concern, like there are events and conditions, there is a material uncertainty, but still the use of going concern basis of accounting is appropriate. If there is no treatment, gone. So this is the way I will approach. First, identify the small things or things which can create a doubt. That's why the term is that may cast significant doubt. So if there are events and conditions that are casting significant doubt, that is your starting point. And then you climb up the ladder and go ahead. Now, which are the events and conditions that may cast significant doubt? Negative cash flow, losses, negative net worth, company's products are not working in the market, company is closing or shutting down its plants, company is planning to wind up, company doesn't have funds to pay salaries, salaries are outstanding for more than 3 months, 5 months, creditors are not being paid or they may file for the insolvency. So there are a lot many events and conditions and examples of those events and conditions that may cast significant doubts on entity's ability to continue as a going concern. Now, for example, cash losses. If they have cash losses, why? What is the reason of having cash losses? What is the background? Whether it is something, that company's products are not working, is it going to get rectified in the coming days? Do you think it is kind of a temporary nature that within a year it get rectified, or it is going to be there for more than 2 to 3 years, or it is happening continuously from previous 2 to 3 years and it will continue further? So whether that particular cash losses that you are looking into the balance sheet or accumulated losses that you are looking into the balance sheet, what is reason behind that? And whether that reason is creating a material uncertainty or not. For example, I have a cash losses, but now the problem is because of that cash losses, I don't have any money to pay off. I don't have a single penny to pay to the creditors, to the salaries, to anyone else. I don't have cash to run the business. Cash losses is just the events and conditions. But material uncertainties, because of those cash losses, I don't have money to run the business. That is material uncertainty. And when I say, even though having material uncertainty, if let's say tomorrow I show you a letter from an investor, that investor is going to give me money next week, next month, next within that particular period, okay, he's ready to fund me further. Fine. Okay, you have a cash losses, you don't have cash to pay, that is a material uncertainty, fine. But you are going to get the money, that is a appropriate I would say reason to say that yes, the use of going concern basis of accounting in the preparation of the financial statement is fine, because till the time you have treatment for these cash losses or the situation where you don't have money to pay. Are you getting the point?
Yes, sir. Very much.
Yes, sir.
Okay. See, there are scenarios where things can go very complicated. For example, let's say an interim resolution professional, okay, is appointed already under the provisions of IBC, and the CIRP process has been initiated as per the NCLT order. Now, in that case, it becomes very complicated for the auditor to validate these things. The auditor is required to ask in that particular scenario to the IRP that, okay, what is the entity's ability to continue as a going concern? Like IRP will provide an assessment for the 180 days. Usually they provide the assessment for 180 days. Okay. Now, in that case, we need to think of whether I have the sufficient information to comment upon on this particular going concern basis, or I don't have. What will be the scenario if IRP is, possibly providing the information or not? So with the IBC, when the proceedings are initiated under IBC, it becomes difficult. Okay. So some might say, okay, the proceedings have been initiated under the IBC, so as of that particular reason, auditor is not required to check for the going concern basis for that particular entity. But the answer is still auditor is responsible. It does not make a difference whether the proceedings have been initiated or not. Auditor is still required to meet its objective. Clear?
Then auditor will consider the plan, the resolution plan of the yeah, insolvency proceedings, that how they intend to make the company stand on its feet and all that.
Yes.
He will be assessing that plan only,
Yes.
basically, not the
Yes.
reports of the company and all those things, because the matter is with the insolvency
Yeah.
authority. Correct.
Absolutely correct. Yes. So at that point in time, those plans will really help us to understand how whether there is a the basis of use of going concern basis of accounting is appropriate or not. Okay. There are other indications apart from the when I talk about the conditions and events. One type of condition is internal. There are external conditions also. Can anyone tell me a recent example of that external condition? External event and condition, recent example. No, Sanjay. I would say when I say recent, that is 2 to 3 months, not even 2 to 3 months. Yeah. I'll tell you. You heard about Online Gaming Act, change in the law.
Change in them.
Yes, sir.
Suddenly, there were companies who were providing online real money games. Because of the law, everything closed. So, like one for the auditor, it's a subsequent event. If something has happened, let's say in the month of August, or financials are still to be signed or finalized by the company and auditor, so audit report is still to be issued. First of all, it will be what kind of event? Subsequent event, but what will be the impact of that?
Material uncertainty, overgoing concern.
Material uncertainty. Okay, fine. So let's take that example only. Okay, so company was there, let's say company A, providing online money games, online real money games. Audit report is yet to be issued. Okay, issued for FY 24-25. Now, let's say August 25. Law bans online real money games. What will be the responsibility of the auditor? What auditor should do? Or what auditor should report? Auditor's responsibility here.
Auditor will verify like management's use of going concern assumption basis is correct or not, and respond appropriately.
So let's say management says like in FY 24-25, there were no events and conditions. So FY 24-25, no events and conditions. There were nothing. Company was earning very good profits. That everything has happened in August 25, after the close of financial year.
Sir, I think it is within the audit report date only, no? Means before signing the audit report date, August 25.
The going concern assessment is with respect to future period only, sir. So it will have impact on auditor's assessment and reporting.
Okay, very good. The assessment which is done is for the future. So I have to think of the future. Fine, very good. So you will say going concern basis is not there. Fine. Now, if that company has prepared the financial statement already, which are in the process of getting signed and approved, will you ask the company to change the entire financial statement and make it to the liquidation basis?
Yes, if the going concern basis is not appropriate, then we can ask them to prepare it on non-going concern basis. Prepare financial statement on non-going concern basis. Only if
Okay.
the going concern basis is not appropriate.
Only if the going concern basis is not appropriate. Okay. So here, you're absolutely correct. What we will do is, here we will first of all understand whether this event or condition is casting significant doubt. See, here the events or conditions are there that are casting significant doubt. When I do a going concern, like assessment, when the going concern assessment is done by the management, okay, there are few things we need to consider. We need to evaluate how the assessment was performed by the management. What period was taken by the management when it came to the going concern assessment. Sometimes they may take 12 months, sometimes they may take shorter period. But as an auditor, we have to consider for at least 12 months. Otherwise, it will not be any appropriate results that you will get. So first of all, evaluate what is the period that has been taken by the management while performing the going concern assessment. Here also, in this particular case, when the financial statement are going to be signed, we will ask again the management, first of all, it's a subsequent event. It's a subsequent event, yes or no? SFI 60 will come into place. So as per SFI 60, what we will do, discuss with management, check whether FS requires an amendment or not, check whether FS requires amendment. Now, in this particular case, the answer of this will be definitely yes, because your entire business has been, shut down and been banned. You cannot carry out your business now. You have to close down your company for sure because of the change in the law or regulation. So yes, FS requires an amendment. Now you are not required to use going concern basis of accounting. Change the basis of accounting. Then comes the third part. You need to inquire with management how they are going to make these changes. And then you need to do an audit, and you need to perform appropriate audit procedures over those changes. So when I talk about appropriate audit procedures, so here an inquiry at these places, you will use SF 570 to understand whether the basis of accounting that is being used by the management is appropriate or not. Whether the management is still using the going concern basis or management is ready to change. If they are ready to change, does your report provides that information? So you have to think from the point of view, from all the point of view. So here 560 will also come into the place and 570 will also come into the place. Okay. Now let's take another example. This was example where you have clear cut identification. Management is going to close the business, perfectly fine. So it is pretty simple, I would say, this example. But now let's discuss one complex example so that we can understand how to evaluate, how to first of all take appropriate decisions in that scenario. Let's say there is a company A. That company A, okay, that company A is you can say manufacturing entity. Fine, manufacturing entity. Now what they are manufacturing, you can say some products which are used anywhere, like normal manufacturing, you can say that. Now what is happening is there is a trade, uh, like trade war is going on. You might have heard on already or read about it. Okay, so there are kind of trade restrictions, or you can say as of now tariffs are being applied to it. Let's say its product, now the company does 30% export and 70% domestic sale. Okay, now there is a trade tariff going on, like 50%, okay, on 30% export. So that happened in the month of, let's say, July 2025. Audit report not yet signed. This 50% tariff will result huge losses and decrease in sale to, like you can say, entire 30% will go to up to 30%. This export will become zero. Now in that particular scenario, what you will do? Now this is a complex scenario we have. What you will do? And yes, another thing is, because of that, this 30% sale is not going to happen from July. So management already have inventory worth of rupees, let's say 25 cr, okay, which is going to be obsolete because they are not they will not be able to ship. This was export inventory which they will be not be able to ship now. Due to this trade barrier, they will not be able to ship, and this is going to be obsolete. How will you deal in this scenario? You are the auditor. How will you do it?
We will inquire with the management their assumption regarding the going concern basis,
Okay.
because there are these events and conditions which are subsequent have casted doubt on the management's company's ability to continue. I mean, doubts are there. So we will
Yeah.
inquire with the management whether how, since their exports will now become zero, how they will continue to, whether they have a diversification plan, whether they have plans for some new products or some other market is there for them for their products which they can sell their products, like continue in some other market, or whether it was the only country where they were selling the products, and what they intend to do with the inventory, and how it will impact their I mean, what impact will it have, if whether they will be able to make it uh, uh, sell it somewhere or make it usable, or what impact will it have in case they don't have this. Based on the management's replies on all these events, what they plan, that will be the first thing, how the management is intending to respond to these conditions.
Okay.
After assessing the management's response, we will the auditor will further evaluate whether still there are conditions which will continue to cast doubt and which do not show resolution, and in his opinion whether they will have a casting doubt on the ability to continue. Accordingly he will respond, sir.
Okay. Very good. Yes. Absolutely correct. So, anyone else have anything further to add to this?
Sir, also we will check first like how much material is this amount. Suppose of total inventory of domestic and export, we will check how much material it is, whether it is proceeding major part of that total inventory or less. Based on that, we can report or comment on it.
Yes, absolutely correct. The materiality, how much, whether it is significant or not. But yeah, like if I'm saying 30% of the sales, and it will have a good impact on the revenue, and it will have a good impact on the inventory. So yeah, considering it is material. Anyone else? Okay. Simply, if I summarize here, what I will do is, first of all, I will, as we already discussed, I will ask management. Management, tell me what your plans are there. How will you mitigate this particular part? Like how you are going to do good of the 30% sales which is going off. Number two, management will also say me that from next, not it will not happen that from very next day I'm getting sales somewhere else. 30% sale instead of export now is being done over there. No, they will give me a plan. Gradually this is the plan that they are going to increase, so I will assess the management's plan and ability to continue as a going concern. Okay, I will ask management, do you think there can be such similar other restrictions or other issues? Like, okay, for example, here you have a trade tariff of 50%, your export is gone. Is there any other risk onto you? Is there are there any other areas where you feel okay, it is a risk for you? Like you may end up in some situation, or you may end up in a scenario where it will become difficult for you. Do you think like that? So management will tell me about that. And at a lot of times, when you see like, I'm not sure whether you have seen the audit report, annual reports or not. In annual reports, companies do provide about these kind of risks. Like these are the risks which, if can create a problem for the company. Like for example, let's say they are talking about some credit risk, they are talking about some different type of risk which is there. So there can be scenarios where the company is doing a disclosure on the risk which is there. So there are multiple risk, what you can say, risk committees within the company, or within the listed entities. Okay, they discuss on what are the risks, what are the areas where company can face troubles, and you need to evaluate those risks. So if I just show you, I have an example, yeah, in a report. This is one of the annual report. Again, we'll not focus on the name of the entity, but see here what they are talking about: business risk. Okay, they are talking about the risk, or which can, if they get materialized, they can become into the events or conditions. For example, strategic and commercial risk, climate change and energy transition impact. And they have given some this particular part which we will discuss when we will be discussing chapter number 8. This human capital, manufacturing capital, the type of 6 capitals which are there, we will be discussing the integrated reporting in chapter number 18. At that point in time we will discuss this, but they have given some risk, commodity and market related. Okay, so there is a commodity market risk, crude oil price for this particular company. Okay, could be a risk. New refining capacity in Nigeria and China capped product prices. So a lot of times, it is not only related to internal but external markets also that you need to evaluate. And this is the information that you need to ask from the management. Okay, what are the events and conditions you look into? For example, if you see over here, how management is planning to respond, they will provide you, okay, what is our response to this risk? For example, their fleets are deployed and automatically, or like that way. For example, cyber security risk. It could be an event and condition. Tomorrow, if there is a very big cyber security event in your organization, your systems are gone, you cannot do operations, it can impact your going concern. So how they are responding to that? So they are implementing zero trust. Okay, then financial risk. Then insurance risk. A lot of risks are there that may create issue, and this is part of your going concern assessment that the management does. Liquidity, interest rate, a lot of things are there which are analyzed when the actual assessment is done. And as an auditor, we are required to go through these assessments. So it's not only the internal factor that we pay attention to, but there are a lot many business risks that we have to pay attention to. What if that gets materialized? Do you have a plan for that? Do you think that it may create an issue for you in the coming days? Procurement of raw material. Some companies are dependent on some, let's say, for example, a raw material which is not available in India. They are exporting from outside India, or they are importing from outside India. Do you think there is a issue? There could be an issue where your raw material might not be available. Your entire business can go for a toss. Profit margins, everything can go for a toss. So at that point in time, what response you have already for that? What you are going to do for that? Okay, so let's say for example commodity price over there. So they are saying that okay, for the commodity price, if I talk about like they haven't specified over here like with respect to fleets and everything in a technical way, but yes, they are they have some plan in place which they are talking about. Okay, if tomorrow the oil prices go up, how we are going to maintain that, how we are going to safeguard ourselves. That is assessment you need to check. Okay, so once you verify this kind of assessment, then you need to think of whether you agree with the management assessment or not, and you need to consider those plans that management provides to you. Then you may carry out your own audit procedures to validate the internal and external part. You need to obtain management representations from them. Okay. And then based on that, decide whether there are events and conditions or not. Clear? Any doubt?
Sir, I have one doubt in this trade tariff example. Suppose there is 100 crore sale, out of that 30 crore is export. So in that trade tariff is 50%, means 15% means that 15 crore will go to government of that other export. Is that the trade tariff?
Sorry, your voice was breaking in
Sir,
last.
I want to sir, I want to understand this trade tariff exactly. I don't know exactly. Trade
It is
tariff.
just an import duty. Trade tariff is nothing but an import duty.
Sir, you said na like this export will become zero. So suppose there is trade tariff of 50%, so only 50% will go na of 30%. Remaining 50% will
No, no,
still
no.
be there.
So what is trade tariff, or what is, let's say for example, tomorrow, your on your imports, like if you are exporting somewhere else and over there on your export, if you are being charged 50% export duty. For example, that country is charging 15% import duty while importing over there, exporting from here. That means now your product of 100 will become 150. Your entire margin is gone. Will you still sell for a loss? Or who will buy a product which is now 50% more costlier, unless and until there is no such product available in the local market? Otherwise, these kind of tariffs or these kind of import duties results in the drastic decrease in your profit margin or increase in the purchase price, and in that case either your customers or you yourself will not be able to either sell, or you will not be even interested to sell because now you are not getting that much margin.
It means, sir, it will increase the price and that trade tariff amount will be paid to the government of that country, exporting country. No?
Yes.
Okay, sir. Now clear. Thank you.
Anyone else with different doubt? Any other doubt?
So then we will say, so like you said, then we will conclude whether there are events and conditions that cause significant doubt. So we will say this, or we will say that the going concern assumption is wrong.
Okay. So that reporting part is still to be discussed. So I'll come on the discuss the reporting part. But
Right. So
here, if
yes.
I talk about the outcome, okay. So after this, the outcome can be in three different scenarios. I'll tell you now. What outcome I can come up to? The first outcome is that, okay, there are events and conditions, but no material uncertainty. There are events and conditions that are casting significant doubts on entity's ability to continue as a going concern, but there is no material uncertainty. Second outcome could be events and condition plus material uncertainty. And the third condition is going concern basis is inappropriate. Okay. Now, all the three segments, all the three outcomes have a different reporting requirement that we need to understand now. Now, in this example, for this particular example, the appropriate outcome is outcome number 2, this one. I would say if these are the conditions in a real life scenario where a company is there, most probably the outcome will go to a events and conditions are there, material uncertainty is there. In that case, I will go for outcome number 2. But there are scenarios it may fall under the outcome number 1. If you're this 30% export is of very small amount, or you have some something to cope up with this 30% export, 2 quarters are still remaining, and you think you can get this export revenue from some other country. So out of this 30, the net impact you feel be only 5%, 25% you can still get from somewhere else. So I may at the end of the year may say that, okay, events and conditions were there, but there is no material uncertainty. Clear?
Yes, sir.
Yes, sir. Clear.
Okay. Now, coming to the part where we need to discuss about the reporting. That is the main and important and crucial part that we need to understand. So we have seen one reporting example where we have the second one where we saw a particular report talking about, okay, events and conditions are there, but the use is appropriate. Okay. Now see, in all the three cases, management, you have to tell to the management disclose this in your financial statement. Okay. So management has to talk about the material uncertainty in the financial statement. It is not only the responsibility of the auditor. Management also is required to disclose. The way we saw a note in their financial statement, management is also required to disclose about the going concern basis. Okay. Now the question comes is, what if management does not disclose? What you will choose? What you will do in that scenario? Anyone?
Sir, we need to check like what is the reason of not disclosing in financial statement, and also we will evaluate also whether there is any material uncertainty exist on going concern assumption.
Let's say material uncertainty is there, but management is saying we will not issue. We will not put any note or anything.
We will discuss with those charged with governance and perform assessment, and then we will give a disclaimer of opinion as per SS 705.
Disclaimer of opinion. Okay. Anyone else with some different answer? Let's say management, you identified there are events and conditions. There is a material uncertainty, but management is not ready to disclose in their financial statement. First of all, tell me, are they required to disclose?
Yes, sir. It is management's responsibility to evaluate whether entity is going concern or not. After that, auditor will also check whether that evaluation is correct or not.
Okay. So you are saying management is required to disclose.
Yes, sir.
Okay. Let's say if management is required to disclose, and if management does not disclose, that means they are not following the financial reporting framework. We will qualify, or you will directly issue an adverse opinion or a disclaimer of opinion. What you will do? Will you qualify, or will you issue a directly adverse opinion?
Sir, we will issue adverse opinion, which is material,
Okay. You will
and
issue
pervasive
an
both. That's
adverse
why we will
opinion.
issue adverse opinion in this case because entity is not a going
Okay.
concern.
Okay. Anyone else with some different answer?
It can be a qualified opinion or an adverse opinion based on the materiality.
Okay. Okay.
Sir, if the going concern basis is appropriate, but materially uncertainty exists, then that case, if the management already disclosed, then the disclosed, then auditor can issue the unmodified opinion. However, he can put that one paragraph stating that material uncertainty relating to going concern. He can include what is that. He can provide the reason for it. Suppose, yeah, if that management is not disclosed,
Hmm.
then definitely he will give the modified opinion. And also, the thing is that he can specify that even in condition that we will give you the modified opinion. No, the basis of modified opinion also we will give the reason behind it.
Yes. Very good.
Then in case of going concern basis in inappropriate, the auditor can straight away give the adverse opinion.
Yes. Absolutely correct. So when I talk about outcome number two, events and conditions are there, material uncertainty there. If management has disclosed and not disclosed, if management has disclosed, in that case, as an auditor, my responsibility is to draw attention. And then I will state the events and conditions. How to draw attention? We will have a separate paragraph called material uncertainty related to going concern. So the way we saw in the example. Uh, Let me go back to the top. This is the one. By this way, by having this paragraph, I am bringing the attention of the readers on this. And this is used when management has disclosed. That's why I am able to talk about this note. Management has disclosed in this particular note. So it has been disclosed by management. Fine. If this is missing, in that case, what I need to do means management has not disclosed. First of all, I will give a modified opinion. Now it can be qualified, it can be adverse, not necessarily adverse. So I'll say modified opinion. Number two, in the basis of opinion, I'll specify the reason that management was supposed to discuss, but management was supposed to disclose these events and conditions which are creating material uncertainty, but management has not. As a result, because of this, we are giving a qualified or modified opinion. Okay. Now, let's talk about when the going concern basis of accounting is inappropriate, that is being used by management. In this particular case, if management uses the going concern basis of accounting, which is inappropriate, there could not be two scenarios in this one. because here if management is using and if it is appropriate, then not an issue. Like we are not going to comment anything. But when we are going to comment when it is inappropriate, and if it is inappropriate, directly, straightforward, adverse opinion. Directly, straightforward, adverse opinion. Now the question comes is, what about the first condition, first scenario, where the conditions and events have been identified, but there is no material uncertainty?
No disclosure will be required.
Anyone else with a different answer? Anyone else with some different answer? So what you will do in this particular scenario? How will you deal? Do you think any other reporting is required over here?
No reporting is required.
Okay, great. So absolutely correct. Usually no reporting is required, usually. But you need to still check for applicable financial reporting framework for reporting. Not necessary. Usually it is not required. I totally agree. Usually it is not required. But at times you might need a reporting based on your financial reporting framework. At that point in time, check what is the reporting requirement. Are you required to report anywhere else? If yes, then in that case, you need to report. Otherwise, fine. Clear?
Yes, sir.
Okay. Now, I will show you one example of the audit report. And this is a very rare case scenario. Usually, we don't have these kind of scenarios. Okay. Again, don't go on the name of the company. It's an old report. So this is a specific scenario because the way it is drafted and the way I would say the conditions were there. So we have a disclaimer of opinion in the audit report. Okay, we have a disclaimer of opinion. In this scenario, auditors were not able to get the information about the financial statement. They were not able to get the things. So there were some company law tribunal cases were going on from 13 to 17. Some orders were there. There was a lot of things were going on in this particular company. Okay, third party forensic examination, frauds were identified. A lot of things are there, and because of which you have a detailed basis of disclaimer of opinion paragraph. Now, issue in the reconciling items. Then, if I talk about pending adjustments, okay, over here provisions which are not being made or which are still being made, okay, not appropriate provisions, not accounted for contractual interest income, like this way. A lot of things were going on in this. Not received sufficient and appropriate audit evidence. Okay, so a lot of things were there. Now, in this particular scenario, how will you comment upon the going concern basis? Tell me, like this is a classic case where you don't have an information. A lot of things are going on in the company. You have issued a disclaimer of opinion. How will you address your going concern basis?
Sir, in this case, going concern assumptions looks inappropriate. Means management has also not provided any information. So accounting should not be done based on accrual basis. Means
See, you don't have information. Do you mean to say that if you don't have information is equal to going concern basis inappropriate?
Sir, here the thing is that he unable to get the audit evidence, appropriate audit evidence. In this case, he is unable to verify anything, whether it is correct or not. And also the possible effect of the material misstatement is also is unknown. So considering all this weight, the uncorrected misstatement, whatever is there, but auditor is unaware. The reason is that he is not at all able to continue the audit procedure to obtain the sufficient and appropriate audit evidence. In this case, straight away, the auditor can able to give the disclaimer of opinion.
Okay. Okay. But how will you, like, what paragraph you will add for the going concern basis and what you will write in that?
So here auditor cannot conclude whether the going concern assumption is correct or not because he do not have sufficient or appropriate audit evidence. So the basis for disclaimer of opinion and the disclaimer of opinion is sufficient.
Sir, in this case, in this case, that the going concerns related things we will not mention anywhere because the thing is that the disclaimer of opinion itself is it's a kind of negative opinion. The whole financial statement he did not verify it. Then there is no question of basis of accounting or going concern or consistency or materiality, whatever the case may be. But it's implied, which means the disclaimer of opinion itself is a no, total negative report.
Okay. So in that scenario, let's go back to the standard again. See, your objective as per the standard is to obtain sufficient and appropriate audit evidence and to conclude. Now, in a scenario when you are not able to obtain sufficient and appropriate audit evidence and you are not able to conclude, okay, so at that point in time, the standard gives us three options. If you're when it comes to the conclusions, if I talk about conclusions, if you are able to draw conclusions, fine, like whether the adequate disclosures have been made or not, adequate disclosures have been not made. So at that point in time, standard has given us, okay, these are the scenarios where you can provide this kind of disclosure, but it does not take away our responsibility for evaluating. See, at the end, if you have a disclaimer of opinion, that does not discharge you from your responsibility of going concern basis, this objective or assessing the going concern basis of accounting. Having disclaimer of opinion still requires us to validate these things. Understand that, number one. So I have to validate and I have to try to get obtain sufficient and appropriate audit evidence. Now the scenario may come that I don't have a scenario where I don't have a sufficient and appropriate audit evidence, or management is not able to provide me because of XYZ reason. That is where I need to understand how I need to report. Because at that point in time, if I say, when I'm talking about disclaimer of opinion, we will also see when we will be discussing SA 705. Okay. When we are talking about disclaimer of opinion, possible effects, and we are talking about that. So if we are issuing disclaimer of opinion, first of all, we need to specify the reason why disclaimer of opinion, and not getting this information can also be a part of your disclaimer of opinion, that even for going concern basis we are not able to get information, and that is can be also one of the ground for the disclaimer of opinion, because we are not able to get information for the going concern basis assessment, like we are not able to validate this, so we are not able to comment upon the use of going concern basis of accounting. That can be also a ground that for the going for the disclaimer of opinion. Yes or no? So accordingly, I have to report, that is for sure. But the way of reporting will change. Either you have a basis of disclaimer of opinion, one of the ground as such, or somehow if you are able to get some evidence where you are saying that, okay, going concern basis should not be used, it is not appropriate, then appropriately, it is going to be your adverse opinion or one of the part that, okay, you feel it is not appropriate. but in no case it takes away the responsibility from the auditor to not to report. You have to report. So in this particular scenario, the case we were discussing,
Sir, yeah, I didn't hear you correctly. So correct me if I'm wrong. You said, sir, we can issue a adverse opinion regarding the going concern. So
no.
we will,
So
yeah.
in that case, let's say for example, uh, when you don't have the information, okay, in that case, either there can be two scenarios. Number one, you are not able to comment on going concern basis. Use of going concern basis, you cannot comment upon. So that can be one of the ground for your disclaimer of opinion. Now, based on whatever limited details you have, let's say you are able to comment that the use of going concern basis should not be appropriate. That means you have a ground where you are saying the financial statement, the way they are prepared, they should not be appropriate. Again, in that scenario, I can issue an adverse opinion instead of disclaimer of opinion, and I can, mention all these things why my opinion is adverse.
So, sir, there will be two opinions you are saying. One is the disclaimer, as earlier said in the opening, regarding the overall audit, and another regarding the going concern assumption.
No, 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 no. There will be no two opinions. There will be only
Oh,
one opinion.
okay.
Either
That is
adverse,
it.
either disclaimer, whatever I may choose.
Correct, sir.
Similarly, in this particular scenario, if you see here, they have specified that conditions are there that are casting material uncertainty, that may cast significant doubts. But we are unable to comment whether the company will be able to continue the going concern or not because of the disclaimer of opinion. They don't have details available with them. So this is again one of the ground of the disclaimer of opinion. See, if I show you, point number two is nothing but the basis of disclaimer of opinion. And just because they don't have evidence, 2.11 becomes the basis or the ground for your disclaimer of opinion. Are you understanding the point over here?
So there will be only two ways. One is if we don't get any evidence, then we can safely conclude that by giving a disclaimer of opinion that there are material events and conditions which cast significant doubt on the entity's ability to continue as a going concern, and we are not able to obtain comment conclude whether the entity will continue as a going concern. That is one.
Yes.
And another is if we get evidence, then we accordingly conclude adversely that we give an adverse opinion that the use of going concern basis is inappropriate
Yes. So
based
in
on.
that, yeah. So let's say in second scenario, when you are saying that use of going concern basis is not appropriate, at that point in time, I may need to have certain evidence in my hand to call it out that okay, I'm 100% sure. As I'm not 100%, but yeah, I have very good audit evidence available with me that is pointing that the use of going concern basis of accounting should not be there. Then only I may go from disclaimer to adverse.
Correct, sir. Thank you.
So disclaimer of opinion, para, and material uncertainty related to going concern, para, both can exist at the same time in the audit report. That means.
You are in front of that. This is a disclaimer of opinion, basis of the disclaimer of opinion, and this is the material uncertainty related to going concern. Now these are the very rare case scenarios, very rare case scenario. Again, I'm saying it is not that every second company will identify like this. Clear? Any doubt? Any doubt? I'll show you something more. Wait, one more
Sir,
example.
whether suppose if the company prepares its accounts as per going concern basis assumption, but the assumption is not appropriate. And also there are other parts of financial statement which are materially misstated and the misstatement is pervasive and we are not getting evidence of that. We are not getting evidence with regard to that.
Understand one
With
thing. First
regarding
of
to
all, when management is preparing financial statement as per the going concern basis, and I say it is not appropriate, as an auditor, I conclude it is not appropriate. Your entire financial statement, your numbers are wrong. Now the second question comes is that evidence or no evidence. I'm saying financial statement is wrong. The number you are disclosed, you shouldn't have been disclosed that. Everything is gone for a toss because now I need to prepare the on liquidation basis. My financial reporting framework may provide us some other basis of preparing the financial statement. I am using the cost approach, historical cost, but that is not appropriate. So everything is wrong. Not only one particular line item or some line items where you don't have the information. Even if I don't have the information, I can say that if you are prepared on the historical cost basis, it is wrong. You shouldn't have. You need to recognize all these assets and the liabilities at the net realizable value and the amount that you will pay. A lot of things are there in that. Are you getting the point? So when I say going concern basis is not there, it's a very big thing.
so suppose we have appropriate and sufficient and appropriate audit evidence that the going concern assumption is not appropriate. But for other aspect of financial statement, other items which is material, we do not have sufficient and appropriate audit evidence, and we are unable to get sufficient and appropriate evidence for other aspects of other items of financial statement. So in this case, we will give adverse opinion or disclaimer of opinion. Which
See,
opinion?
your first sentence, when you are saying use of going concern basis is inappropriate, that means management has used that, and you are saying management should have not used that. Fine. That is the first sentence. That is the first part. Now, when I say management has used that, that means all the items in the financial statements are based on historical cost. You have the evidence or you don't have the evidence. They are not prepared on the basis of the either you can say net realizable value, liquidation value, or any other basis which is provided by your financial reporting framework. Having evidence for the cost or not doesn't make a difference. For example, let's say fixed assets. Now, the fixed assets which were there in the books of accounts are the based on the historical cost. Let's say when you are saying going concern basis should not be used, and management means it has been used by management. That means whatever amount is shown in the fixed asset is based on the historical cost. Now, it doesn't make a difference whether you have the evidence of the historical cost or not. It is wrong. It was not supposed to be reported that way. You were supposed to report on the basis of the net realizable value or any other appropriate way. So when you don't have a evidence, still you can say it is not appropriate. Why? Because the basis, the main core assumption of the accounting which has been used by the management is incorrect. So
There will be an
opinion.
adverse opinion.
Yes.
Okay, sir.
Okay. Any other doubts? Any doubts? Okay. Another example. Here we have a qualified opinion, not the disclaimer of opinion. We will not go on the name of the company, but here we have a material uncertainty relating to going concern paragraph. Okay. So a lot of things are there: liquid asset, company settlement of liabilities, XYZ reason. Okay. But what they are saying that the ability of the company to continue as a going concern is solely dependent on the acceptance of debt restructuring proposal, finalization and approval of the resolution plan, which is not wholly within the control of the company. The management has accordingly prepared the standalone financial statement on going concern basis, based on the assessment of the successful outcome of the restructuring proposal, finalization and approval of resolution plan, our opinion is not modified. So here there were issues. In next year, they are pointing out, okay, there were issues. Attention is invited to note number 30 where management has disclosed. But management is saying that there will be successful outcome of these restructuring proposals, and hence going concern basis is appropriate. And our opinion, this point, very important. Our opinion is not modified in this respect is very important. You have to specify that you are not modifying your opinion on the basis of that. Clear? So one again example for the material uncertainty paragraph. Any doubt? Any doubt, guys? Any doubt?
No doubt, sir.
Okay. If no doubt, then let's take a break of 10 minutes. After the break, we'll gather back and practice some questions on this particular topic, because we need to also see how to answer the questions for this particular topic. Okay. So let's take a quick 10-minute break. continue the discussion. So now what we are going to do is we are going to quickly go through the standard from the bare text and the study material, and then we will go through some questions that we have that I have for the particular standard. Okay, so let's go through the standard and we'll understand quickly the scenarios and the requirements which are there. So we understood the objectives. Okay, now when it comes to the requirement, first, as we have already discussed, that when performing the risk assessment procedures, at that point in time, look for the events and conditions that are that may cast significant doubts on the entity's ability to continue as a going concern. Okay, in while doing that, you need to see whether management has already performed the preliminary assessment or not. If yes, if management has performed, then discuss the assessment with the management and determine whether the management has identified events and conditions or not. If management has not performed, then ask management why not perform. Inquire with the management. Okay. And you may ask management, can you perform this assessment for us? First, you perform and then tell us what is your outcome if you are not performed. Okay. You have to remain alert. As I said, start with the events and conditions, then go to material uncertainty, and then finally evaluate. So you have to remain alert for the events and conditions. And then, the flow will come. You need to evaluate the management's assessment, basically. How? You need to think about, okay, what management, you need to discuss with management and you need to see what management has considered in their assessment. What period they have considered. Is it sufficient period or do you need a longer period? If management assessments covers less than 12 months, then request management to extend its assessment period till at least 12 months. And then you need to consider all the information that is there for the assessment and evaluate whether management assessments also considers all the relevant information that you are aware. And ask management even beyond your assessment, do you are you aware of any events or conditions? Like, okay, you have performed 12 months assessment, perfectly fine, but beyond 12 months, do you think there could be a condition or there could be an event that may have a problem? For example, the risk that we have seen, examples of the risk, business risk examples. Okay, when you identify these events and conditions, you need to perform additional procedures, as we have discussed. So what additional procedures is that gather sufficient and appropriate audit evidence in order to verify whether these events and conditions are raising doubt about the material uncertainty. Now gather the appropriate audit evidence to determine whether or not a material uncertainty exists related to these events, and including the mitigating factor. This mitigating factor will determine whether the use of going concern basis of accounting is appropriate or not. So mitigating factor, then request management to make the assessment if they have not performed the assessment. Evaluate management's future actions and plans that they have. These plans, like, what could be how the management is tackling with these events. Okay, management has prepared a cash flow or not, analyze that. Okay, evaluate the reliability and underlying data, adequate support. Because see, when I talk about this cash flow is a type of which particular information. This information has a name. We have discussed this. What is this name of this particular type of information? We call this information by a specific name. We have discussed this. Anyone remember something we called IPE? Yes or no? We discussed something IT.
Yes, sir.
What was that?
Yes, sir.
Anyone? What was that and where we discussed this? Either you guys are not reading or you are not paying attention to what we are discussing. This is already we have discussed in past. So we discussed when we were discussing SA 500. This is nothing but information produced by entity. When we were discussing SA 500, at that point in time, we discussed this in detail. How to audit information produced by the entity. What are the procedures auditor is required to perform? And accordingly, which includes underlying data, assumptions, method. Yes or no? Am I audible to you guys?
Yes, sir. Audible.
Okay. Okay, so that is how you need to audit this particular part. You need to evaluate this particular part as an information produced by the entity. Then you need to look into any additional facts or information that may be available. Okay, since the date management made its assessment, means after the assessment till the signing of audit report, any additional information available, kind of, you can say, subsequent events. Then request for written representation. We will go to written representation in a while, but yeah, then request for the written representation. Then conclusions. You have to derive conclusions whether a material uncertainty exists or not, or there are events or not. So, for example, if you say adequacy of disclosure, when events and conditions have been identified and a material uncertainty exists. So, let's say, for example, you identified a condition where going concern basis is appropriate, okay, but a material uncertainty exists. Now, if that is adequately disclosed in the financial statement, okay, then in that case, what you are required to do, you are required to provide an information, like disclose clearly that there is a material uncertainty, okay, by way of a paragraph. Now, adequacy of the disclosure when events and conditions have been identified, but no material uncertainty exists. Means events and conditions are there. Going concern is basis is appropriate. And but material uncertainty is not there. In that case, usually there is no requirement to report, but still consider or check the requirements of applicable financial reporting framework. Are you required to report or not? Now, areas where it is not appropriate. Let's say, for example, going concern basis is inappropriate. Simple, adverse opinion. Don't think further. Everything is wrong.
Sir,
Yes.
suppose management assessment is for 12 months only, but at the 13th 13th month, at the 13th month there is a huge material uncertainty and management has no plans to cope up with it, and the management use going concern basis of accounting. So what auditor will do?
So in that case, auditor, see, first of all, auditor has to consider that additional information. Okay, where we discussed about the subsequent events. So consider when any additional facts or information have become available since the date of management made its assessment. So let's say management made an assessment of 12 months. At that point in time, there were no events and conditions. After that, it became available. In your assessment, you have to consider that. Number one. Number two, you need to ask management, you perform this assessment perfectly fine, not an issue. But are you aware of any events or conditions that are beyond the period of assessment that you have taken? If yes, then discuss that particular event with management. Ask management how you are planning to evaluate. What are your plans? So again, we will go to management and we will ask management, what do you think about this particular event? Okay, are you going to do something for this? Are there any plans, or can you include this particular period in your assessment? So request management to extend the assessment period to at least 12 months or the period where you identify that event. So ask management, extend your assessment, give me a fresh assessment with a bigger period now, and then see what management is doing and how management is assessing, what are the plans of management and everything, and based on that take the decision. Clear?
Yes, sir.
Okay. So we were on the conclusions where we were talking about going concern basis inappropriate, adverse opinion. Don't think further. I'm saying second part is going concern basis of accounting is appropriate, but material uncertainty. Now this may have two types where it is disclosed. Adequate disclosure of material uncertainty is made in financial statement. So you will express an unmodified opinion, but additional section, separate section under the paragraph, material uncertainty relating to going concern, draw attention to the note and state the conditions. And then specifically provide that auditor's opinion is not modified in respect of this matter. This is very, very important. You have to state this. Draw attention, state the reasons, and specify modification is not there. Now, the second scenario where adequate disclosure not made. At that point in time, qualified or adverse opinion. In the basis of qualified or adverse opinion, provide the material uncertainty details which are not disclosed in the financial statement. If management is unwilling or not ready to extend its assessment, or management is not ready to consider the events that you have identified, in that case consider the implication on the auditor's report. Is it something which is casting material uncertainty? It is something that pointing towards material uncertainty, and management has not extended. If yes, in that case express a qualified or adverse opinion based on scenario. Okay, and then you have to communicate with those charged with governance. So about the events and conditions, use of going concern basis, related disclosures in the financial statement, and implications on the auditor's report. There is one point where there is a significant delay in the approval of financial statement. Okay, so at that point in time, you need to think whether this delay is also an event or condition or not, and accordingly you need to assess its impact on the financial statement and auditor's report. Clear? Any doubt with this? Any doubt with SA 570 that we have discussed now?
No, sir.
Okay. If no doubts, then this was from your bare text. Okay. Now we will go to study material. We'll quickly see in the study material. Okay. So yes, Aman.
Sir, in case the delay of approving of the financial statement and delay, then that case, auditor, what he will do, sir?
So you need to think of, you need to check why there is a delay. What is the reason for the delay? Is it something, pointing towards the events and conditions? So if there is an event and condition, in that case, you need to, think of whether they are casting, material uncertainty. So this could be, pointing towards those events and conditions which are creating material uncertainty. And accordingly, you need to assess everything again.
Okay, sir. The reason behind for the delay in approving to be understood and discussed.
Yes.
Okay, sir.
Okay. So in your study material, you have a very good chart, summary chart for the SA 570, which is page number 6.6. Okay. This is very important and you should go through this. We have discussed in the detail the particular point already. Okay. Then we have one more standard covered in this, which is written representations. We have discussed multiple times. It is pretty straightforward. We will discuss this. But before we go to written representations as such, I would like to take some questions on this topic, SA 570. Okay, how we will write the answer in the exam, and then accordingly we will discuss further on SA 580. So let me take up some questions. Okay. So we have first question. CA Reha is a statutory auditor of Skyline Airlines Limited for the financial year 31st March 2025. The airline industry has been facing a severe downturn. As of the balance sheet date, the company has a significant net liabilities and reported recurring losses from the past 3 years and was in breach of certain covenants of its bank loans. Management is in it's in going concern assessment, acknowledged these adverse conditions, but concluded that the company remained going concern. Their conclusion was primarily based on the detailed cash flow forecast, which showed a positive outlook. Heavily reliant on securing new funding, a round of funding of 500 crores from a specific private equity investor. This one, like they have also now got some funds. The negotiations were at the advanced stage as of 31st March 2025. The audit was completed on May 2025. However, on 22nd May, before CA could sign the audit report, venture capital partners publicly announced their decision to withdraw from the funding negotiations due to change in their investment strategy. When CA discussed this matter with the airlines, they argued that there was a non-adjusting subsequent event. They stated their intention only add a brief disclosure about withdrawal of the offer without changing their overall assessment about the going concern basis, as they are now actively seeking other funding alternates. As a statutory auditor, you are required to evaluate the impact of the withdrawal on the funding on the company's ability to continue as a going concern. So this is the whole scenario. I'll give you a minute. Okay, take a minute, read the question, and then try to answer. Okay, so did you read the question? What do you think CA RIA should do?
Sir, going concern basis is not appropriate as the party has withdrawn its funding commitment. So if the company is not ready to amend its financial statement and prepare it on liquidation basis, then RIA has to give a adverse opinion.
Okay. Okay. Anyone else?
Hello, sir.
Yeah.
Am I audible?
Yes, yes, you are audible.
Okay, sir. Sir, firstly, the thing is that the company assessment is right only. The thing is that even though company is not able to meet their commitment and reported losses in the first 3 years and was breach of the certain covenant on this book bank loan like that. But company is able to overcome the situation and there is a positive evidence for that, they are going to fund for 500 crores, which means within a 1 year time, which means the going concern we talks about within a year, the company there is a positive evidence. On considering that case, the company is also disclosed correctly, and in that case it is a right. But on the subsequently, it's all exist under 31st March 2025. And the subsequently, the thing is turned to the other way around. The venture capital who partnered, they withdrawn that situation. Now the condition is this is adjusting events also. Hence the going concern impact is there. So consider that bad, then accordingly the management should be able to reassess and accordingly they should report it. Now the management is not ready to adjust and report it. Considering that fact, the auditor definitely give that adverse opinion on this case.
Adverse opinion. Okay, fine. Anyone else with some different answer or something further to add? Anyone else with some different answer or further to add?
The management sole basis for showing a going concern was they were relying on the funding from the venture capital, and having announcement made by the venture capital, then the management say that they will only have a brief disclosure because there is no further positive evidence regarding the going concern. So the assessment of the management which the auditor is going to assess, the assessment of management's assessment of the going concern is based on, is not conclusive, is not correct, because the basis is gone. Basis of the management for making going concern assumption is gone by that withdrawal. So definitely the assumption is wrong and it has to be reported. And he will give an adverse opinion. Auditor will give an adverse opinion.
Okay.
Because there is no further evidence regarding coming from the management that and any other outlook showing that how they can continue for the future, how they can mitigate these circumstances. There is no further positive evidence regarding that.
Okay. But now the question comes when you have to write the answer. How will you write the answer? Like, what will be your approach to write the answer? See, your outcomes, okay, to adverse opinion or to issue a qualified opinion is one thing. But when we have to write the answer, we have to write in a certain way. We have to mention some specific points. So, how will you write the answer? What are the points that you will mention? Can anyone tell me that flow? Because that is the most important part for the exam. Anyone?
We will write the responsibility of the auditor. What were the responsibilities of the auditor for making a going concern assumption regarding that?
Let's say, for example, you have to write 5 bullet points in this. What 5 bullet points or 6 bullet points you will write? What you will write in that?
So firstly, we will say that as per the SA 570, the going concern is that the company is going to continue its operation as a foreseeable future. Yeah. And also, if the company is able to continue its business at least 12 months in the near future. See, this is what it is a going concern. Then, if that is true, the company has to assess the going concern concept, going concern as appropriately and provide and conclude whether it is a company is a going concern or not. In this given case, the company had the real plan to get that money from 500 crore from the one of the capital venture partner. So the company, even though it unable to meet that past overdues, however, they are expecting the company will be going concern due to the 400 or 500 crores. In this case, what company is correctly identified and reported as a going concern is appropriate. Subsequently, the situation is differ. The thing is that the venture capital partner is withdrawing the situation. So the company is again the responsibility to reassess the whether the going concern is appropriate or not. The company is missed to appropriate. We missed to reassess the going concern as appropriately. So having identified all this is problem, the situation is that since the company is unable to identify and they are inappropriately reported, so the thing is that the auditor, the responsibility to report it is that going concern is not assessed inappropriately. So hence the adverse opinion is given.
Okay.
This is
Okay.
what I will give.
Okay. Anyone else? How they are going to write this particular answer in the points? No? Okay. See, if I have to write an answer for this particular question, what I will do is, first of all, I will start with always read what question asked you to write. Okay, they are asking advise CA Ria on her responsibilities and appropriate course of action. So, what is the responsibility of CA Ria for SA 570? The responsibility of CA RIA for respect to SA 570 is that she needs to assess if there are events and conditions that are casting significant doubt about the entity's ability to continue going concern, which are resulting into a material uncertainty, then whether they have been disclosed in the financial statement or not. Okay, number one. Number two, appropriate course of action. If certain conditions, additional conditions or events have been identified, then CARIA needs to perform additional procedures to obtain sufficient and appropriate audit evidence to ascertain whether there is a material uncertainty or not and what are the mitigating factors for that. Second, number two, I will quote on the SA 560. So once I'll quote SA 570, the responsibility about material uncertainty and about mitigating factors, additional supporting appropriate and audit evidence. Okay, then I will say that considering whether any additional facts or information have been made available since the date on which management made the assessment. Second, subsequent assessment or subsequent events. I will talk about SA 560. That okay, auditor must perform procedures to identify events occurring between the date of financial statement and date of audit report. And if events are identified, then auditor must discuss with the management and all those steps. Based on that, I will do the analysis of subsequent event. Okay, and then I will discuss the conclusion. It should be either qualified or adverse opinion based on the disclosure that is being made by the management. In this case, the airline, and accordingly, I will conclude my answer. Clear? Any doubt with respect to this one?
Yes, sir. Clear, sir.
Okay. If no doubts, let's take another question. Very good question, I would say. Let's take another question, one more on the similar lines. So the question is, CA Vikram is the statutory auditor of Innovate Pharma Limited for the financial year ended 31st March 2025. The company has been experiencing significant financial distress, including negative operating cash flow, declining market share, management assessment of going concern, okay, which includes the company can continue its operation heavily depend on two key factors. One, you have a launch of a successful new drug called Healmax scheduled for the second quarter of the financial year. Second, the continued financial support from its parent company, Global Health INC. During the audit, CA Vikram reviewed minutes of a post-year-end board meeting held in April 2025. He discovered that the primary supplier for the key raw material of Healmax is newly incorporated entity Biosource LLP. Upon further inquiry, it was revealed that the Biosource is an entity in which the wife of Innovate Pharma's chief financial officer is a significant partner. This relationship was not disclosed to the audit team. The supply contract with the Biosource LLP is for the period of 5 years on the terms that appears unusually favorable to the supplier. When confronted, the CFO admitted that the relationship but argued that the arrangement is beneficial for the company and it's crucial for the Healmax launch, thereby supporting the going concern assumption. Management is reluctant to provide any specific disclosure related to this transaction or its potential impact on the going concern assessment. You, as a statutory auditor, you are required to evaluate this situation with reference to the relevant standards on auditing. So, evaluate this situation and comment on like what should be the appropriate course of action for the auditor. So, take a minute, read the question again, and then try to answer. Focus on the key details which are given in the question. Have you gone through? Or do you need a minute more? Let's take a minute more. Okay, now tell me.
Sir, in this question, we will divide answer in three parts: PSC, provision, analysis, and conclusion. In provision part, we'll mention SA 570 going concern and SA 550, which is related party related. After mentioning these 2 points, we will in analysis part we will mention that there is responsibility of the management to assess the entities going concern assumption. Those part, and in conclusion part we will write that and the auditor is not able to evaluate this entity as a going concern because entity itself has not done evaluation. So this is that.
Okay. Anyone else with a different answer?
Sir, here the situation is very clear, sir. Actually, here the situation that the management going concern, which conclude that company can continue its operation. It's heavily dependent on the two factors. The factor number one is that upon successful the new drugs, Healmax, that is a one part. However, the second part is the continued financial support from its parent company, that is a Global Health INC, which means the continued financial support as long as they are predicting there is no impact on the going concern. That is what it is. Because in the near future, at least 1 year, the parent company is giving the guarantee and continuously supporting. That is another one point, main point. Another thing is that CFO, that her wife in the BioSource LLP Limited, that is a related party transaction as per SA 550. It's talk about, but it seems to be that terms appears to be unusually favorable to the supplier, which means we believe that it's a arm's length price. There is no issue at all. The thing is that as having evaluated all this kind of condition situation, as long as the company is continue to get this financial support from the parent company, there is no impact on the going concern. There is no need to say if this information is provided and disclosed in that financial statement, then auditor is not modifying his opinion. It's not needed.
Modification is not needed. Okay. Anyone else with a different answer?
Sir, here management is not providing appropriate disclosures like the conditions, management's plan. It is written that management is reluctant to provide any specific disclosure.
Yep.
So there can be a qualified opinion.
Okay. Qualified opinion. Anyone else? Anyone? See, that's where we need to evaluate this scenario from 2 points of view. Okay. Number one, from the related party point of view. Remember what we have discussed in the related party. If you identify a related party transaction which was not previously disclosed, what is the responsibility of the auditor?
He has to identify the related of relationship and related party transaction and appropriately disclose it.
Okay.
Disclosure is not the responsibility of the auditor, but however, the auditor insists to the management to check and disclose it.
Okay. So, see, as per SA 550, if auditor identifies, how I will write an answer is that if auditor identifies related party transaction which was not previously disclosed or which was undisclosed, first of all, I will ask a management, why did you not disclose this to me earlier? Number two, communicate to the entire team. Number three, I will ask management identify all the transaction with this related party and inquire with management why your control failed. I will perform appropriate audit procedures because now there is a risk of fraud involved. Okay. It is a question on the integrity of the management. It is the risk of fraud involved because management did not identify this earlier. So there is a high risk of fraud by the non-disclosure. Number four, management is not ready to provide the disclosure in the financial statement. I need to evaluate whether this non-disclosure is preventing the financial statement from achieving true or fair presentation, whether this non-disclosure is causing the financial statement to be misleading. If yes, then in that case, I will qualify or issue an adverse opinion. Now, in this case, there is one more point given. The point basically is that if you see this particular contract which is there, okay, this contract was usually unusually favorable to the supplier, means unfavorable to the company.
Yeah, which means beneficial to the company.
Unfavorable means not beneficial to the company. Yeah.
So we were the suppliers, huh?
No. See,
He is the recipient,
okay.
right?
No. Heal Max. See again. This is BioSource. this particular one, okay, is a primary supplier for the key raw material. Biosource LLP is a supplier in this particular question.
Okay, sir. For biosource, is it unfavorable? Which means for the client, is it favorable?
It is usually favorable to the supplier. That means it is unfavorable to the company. That is the Innovate Pharma Limited. So you are doing favorable to LLP, but unfavorable to Innovate Pharma. Appears unusually favorable to the supplier. Who is the supplier? Who is the supplier?
Biosource LLP.
If it is favorable to Biosource, then unfavorable to the
Company, that is
who is buying
Innovate
from
Pharma.
them. Yeah, Innovate
Yes.
Pharma.
Sir, here the thing is, biosource is a supplier, and the client is that he is the client, right? Client is usually favorable to the supplier, which means it's not favorable to the supplier. For biosource LLP, it's not favorable.
No, what is rate is written? Appears usually favorable to the supplier. Supplier is the Biosource LLP. And the company Innovate Pharma is the customer to that supplier. Clear? Or still there is a doubt?
No, sir, it's clear.
Okay.
Yes, sir, clear.
So in that case, if it is unfavorable to the company, there are 10 different reports places where I have to report about that. It is something prejudicial to the interest of the company. So now the question comes is, if it is a prejudicial to the interest of the company, again, fraud risk, it is not giving true and fair presentation, it is causing misleading to financial statement to be misleading, it will be an adverse opinion. And in company said, if you see section 143, 143.3, over there also you will find, like, if there is something prejudicial to the interest of the company, you will report that. So one, I will report as per section 143. Second, it is causing the financial statement to be misleading. They are not allowing financial statements to achieve true and fair presentation. Again, that is a problem, and accordingly, I will modify because of that. Number two, there is a fraud risk. Because this was not disclosed, unfavorable to the company, favorable to the supplier. Supplier is a related party. The question comes is then, when I say unfavorable, another question comes is arm's length price. Is it arm's length price? If no, then it is a misleading.
Yes, sir, it's not an arm's length price.
Absolutely. So if remember, we discussed about in the related party that when management makes the assertion that the financial statements are required to be, the transaction between the related party, which are there in the financial statements, were conducted on the terms equivalent to the arm's length price. Here, I am raising a question on that. If the arm's length price is not there, what was the scenario? That means the transactions are favorable to the supplier, not to the company. It's a fraud. It's a definitely fraud. Window dressing. Number two, this is majorly on to the related party. When it comes to the going concern, okay, when I talk about the going concern assessment, now here, yes, as an auditor, I am required to look into the going concern assessment. No doubt in that. But the going concern assessment is dependent on these two things: continued financial support and successful launch of new drug. The question here is that whether management has appropriate plans to provide that, okay, there are material uncertainty, but whether management has appropriate mitigating factors and the plans to counter that material uncertainty. Like, for example, do you have this support letter? Question number 1. Question number 2. This successful launch of new drug, okay, for the second schedule, do you find this feasible? Okay, do you think it is feasible? Management will be able to launch and the revenue will be able to, come back to the normal after this. Based on that, you need to decide whether there is a material uncertainty or not, whether the use of going concern basis is appropriate or not. See, one, due to fraud risk and due to these related party, I am going to issue a qualified opinion. Now the question comes is whether it will be qualified or adverse, that depends upon the materiality. Number 2, because management is not ready to provide any specific disclosure related to this transaction and potential impact on the going concern, means management is not adequately disclosing your events and conditions. So there is a non-disclosure of the events and conditions and material uncertainty. So I'll do a adverse or qualified opinion on that also. So there will be two bases for the adverse or qualified opinion: related party, arm's length price, and this going concern disclosure.
So it can be then, for one thing, it can be a qualified, and for the other part, it can be a adverse opinion. No,
You cannot give two different opinions in an audit.
that is true, sir. So how will we assess that, address that?
See, when you are saying adverse, means it is way beyond than qualified. Means everything is wrong. Like majority of the portion is wrong. Then having a small more qualification will only be adverse.
Right. Thank you.
In a mathematical terms, it's something like, if we have to discuss, we generally say that if you add anything to the infinity, whatever number it is, it will give you infinity. So if you add any qualification to the adverse opinion, it will give you adverse opinion only, final outcome.
Yes, sir. If we order to minus to minus, again minus only.
Yeah. So that is the point.
See, actually, sir, I wrongly understood like that unusually favorable. I wrongly understood, interpreted that it is a favorable to supplier.
Yeah.
That's my mistake.
So when you have to write the answer, again, the flow will be the same. That is, specify 550, which is the main part over here. Okay. You need to specify what is the requirement under 550. Then specify 570. Then do the analysis like substantive procedure, business rationale, management integrity, impact of the going concern, casting doubt, okay, undermining the launch assumptions. And then if management agrees to the full disclosure, fine, issue unmodified with a paragraph. If management does not issue to the refuses adverse or qualified opinion based on whatever it is, and I will conclude with that. Clear? Any doubt with this question?
No, sir.
No, sir. It's a super question.
Thank you. Okay. If no doubt, this. Prashant, yes. Do you have any question?
No, sir. I was just about to say, sir, these type of questions where there are two standards involved, or so these are standards on which, these are the questions on which we need to practice more, sir, because these the straightforward questions we can write, we will be able to write, but these questions which are touching on the two different standards and then writing the answer on that, we need to practice these. So it's very nice, sir, you're covering these questions, sir. Just wanted to say.
Thank you. Thank you. Okay. So let's take one more question. I have one more interesting question on this, a similar line. Okay. So let's take that one also.
Yes, please, sir. We are interesting.
Thank you. Okay. So this question, I think, would be some bit of straightforward, but let's see. CA Arjun is the statutory auditor of CloudNet Services Limited, a data hosting company for the financial year ended 31st March 2025. As of the balance sheet date, the company was facing significant financial difficulties. It had reported substantial net losses for the last 2 years, and its primary lender has expressed unwillingness to renew the credit facility expiring in the June 2025. Management has prepared a going concern assessment, but it was on highly optimistic and largely unsubstantiated revenue growth projections. On April 2025, before CA Arjun could substantially commence the audit procedures, CloudNet Service Limited suffered a catastrophic ransomware attack. The attack encrypted and rendered inaccessible the company's entire financial and operational database for the financial year 24-25, including general ledgers, subsidiary ledgers, customer contracts, and all supporting documentation. Despite the efforts, the company has been unable to restore the data. Consequently, the management is unable to provide CA Arjun with the books of accounts or any other necessary record to conduct the audit. Furthermore, the cyber attack has crippled the company's operations, leading to a complete cessation of the business. Management is now unable to provide a revised or meaningful assessment of the company's ability to continue as a going concern in the light of this devastating event. As a statutory auditor, you are required to analyze this situation with reference to the relevant standards on auditing. Advise CA Arjun on the impact of these events on the audit report and type of opinion he should express in his audit report. So take a minute, read the question, and then try to answer.
Firstly, the company is already having the problem. Again, there is a problem.
That's the question. I know we have not discussed the part about the opinions, but I think we have a fair share of idea like how the opinion now will work.
So its situation is very clear, Karan. The first basis also the company is unable to the substantial loss for the last 3 years, and his primary lender also is had expressed unwillingness to renew that situation also is there. There is an impact on the going concern. Secondly, on the checking whether the company's going concern is appropriate, the assessment is appropriate or not, to verify and confirm by the auditor also, in the situation he is not able to get the appropriate and audit evidence. It's a limitation due to the not by the management, a limitation by the situation itself. In this situation, it's not fault of the management. So the thing is that since already the management is communicated to the auditors that there is a substantial net loss for the 2 years and unable to repay, the unwillingness also is there. The situation is clearly explained, it's known to the auditor, which means the going concern impact is there. If it is probably if it is disclosed, then even though there is a material uncertainty is available, is going concern appropriate, accordingly we can conclude. If it is not inappropriate, then the conclusion part is different. But the situation is altogether different on the second part of the question. The thing is that the auditor, due to the ransomware attack, they are unable to reproduce the thing. But however, if there is backup is available, I think the company is on that, those part is missing in this question actually. So here being a limitation is based on the situation circumstances. He unable to get and collect the appropriate audit evidence to comment upon that whether the going concern is there or not.
Okay.
So based on that, auditor need to take a call, sir.
Okay. Anyone else with a something different answer or something further to add? Or how will you write answer for this question in exam? Anyone?
management has not. So the management has prepared the going concern assessment, but it was based on optimistic and unsubstantial revenue growth projections. So the going concern assessment of the management is uh, not based on realistic assumptions, and they have not substantiated that by any evidence to the auditor. The auditor has not been till now, till that date period itself, the auditor was not able to obtain any evidence by which he could conclude that the going concern was appropriate. So already the company was facing financial difficulties. In the earlier part, it was stated, and reported net losses itself, and primarily lender has uh, expressed unwillingness to renew credit facility. So company was facing financial crunches because of that also. So that part itself is there, sir. Subsequently, the attack happened, and the company's database has been attacked by cyber and crippled the systems. So the business itself is seized. So this is an additional ground for the going concern assumption being inappropriate, because as it is, the business itself has ceased, and the auditor is also not able to perform the procedures because of the lack of data and evidences further. And further, the management is now unwilling to provide a revised or meaningful assessment also. This is also a significant ground. So auditor will have to conclude that he cannot he will conclude that it is the going concern assumption is inappropriate in these circumstances, in my view, sir.
The thing is that the adverse opinion only, not the disclaimer of opinion, but auditor can issue the adverse of opinion.
Okay. See, my answer will differ a little over here. I will say it's a disclaimer of opinion. The reason because, the primary and the only reason because, is this line. Before CA Arjun could substantially commend the audit procedures, that means he has not still assessed the going concern assumption that is done by the management. When I give a adverse opinion at that point in time, means I have assessed it and I am saying that it will not be appropriate. Here, before he could commence, there was no data available. Like, okay, this particular point, okay, management has prepared going concern basis of assessment and highly optimistic, largely unsubstantiated growth. This one, yes, this is a material uncertainty. I totally agree. These are
Sir, why I am telling the adverse opinion here? The thing is that the auditor is not having the chance to check and verify it. How come he straight away is, see, even though that management is assessed and they are telling that unsubstantiated revenue growth projection, all these things, even though whatever the case maybe they can tell it, it's not a matter. But the auditor responsible to evaluate whether what they are telling is correct or not. Okay, sometimes they may tell wrong also, sometimes they will tell right also. But auditor has to, there should be a chance to verify it. The chance is missing. That is the reason I came to give the conclusion of the second situation also is situation is the ransomware attack. See, that is not the fault of the management. This management restriction is not there. They are not limiting anything. But it's a situation is that unavoidable situation. The thing is that the auditor, there is no chance to check and verify the condition existing, whether it is a going concern is appropriate or not. That is the reason I am coming to conclusion that this adverse opinion.
So you had when you were discussing the various audit reports, the sample reports, you had also mentioned that this IT systems being hacked is itself a going concern risk. In
yes.
that you had given one example also in that.
Yes. So over there, I specified in one example that when you can, like, that example had a disclaimer of opinion and going concern together. If I go back to that example has a disclaimer for opinion and going concern together. Here, why I am saying disclaimer of opinion, the only reason because CA Arjun could not perform any procedures. If he could have performed some procedures, see, to call an adverse opinion, I need evidence in my hand. Adverse opinion is supported by the evidence. Disclaimer of opinion is supported by, like, when you don't have any evidence, you have to issue disclaimer opinion.
That is
For
perfectly
adverse,
fine, sir. But sir, this who is writing this line? But it was based on highly optimistic and largely unsubstantiated revenue growth projections.
see,
Whose
that's why
line
I'm
is it?
saying, yeah, that's why I'm saying it is material uncertainty. And when I say optimistic and largely unsubstantiated revenue growth projection, that means in audit, what happens is when you do a first assessment, understanding the entity plan, at that time, initially you obtain some detail. But by the time when you go in detail to check, remember, this is nothing but IPE, information produced by the entity. Now you need to check assumptions, you need to check methods, and you need to talk about, like, how much deviation is there. For example, it is highly optimistic, perfectly fine. But it is something which management cannot achieve. Management can achieve 50% of this, 60% of this, 70% of this. How much deviation we are expecting? That you can only decide once you are done with the audit procedures.
Correct, sir. Fine, sir. Bilkul perfect.
Yeah. So here, at the first instance, I don't have anything in my hand, even to say how much deviation actually it was there. Highly optimistic, fine. But by what number management will miss from this? What is the actual number that we think as per our assumptions? Like, whenever there is a IPE, or whenever, remember, we discussed in SA 540 fair value estimates. Okay, estimates, that whenever management is making estimate, we have to make our own estimates. We have to check whether what are the assumptions, what is the output, management output versus our output. So at that point in time, if you don't have any output to compare, how can you say that it is inappropriate? Yes, on a face apparent, it is on a very big scale, it is looking inappropriate. That is fine, but to what extent, we don't have that number. That's why here I'm saying these are the conditions leading to complete cessation of the business. These are the conditions which are causing material uncertainty. Yes, totally agreed. No doubt in that. But at the end, we don't have any information even to say that this is how much the deviation is. This is how much the misstatement is. This is how much the, actual impact will be. That's why a disclaimer of opinion.
Yes, sir.
Right, sir. Got it. Thank you.
So in this particular scenario, I will explain the whole, like, unable to obtain the information, no audit evidence, limitation on the scope of the audit. Like, okay, like SA 705, we are yet to discuss, as I said, but I will refer those. I will talk about limitation on the scope of audit. Okay, ransomware, impact on the going concern. Yes, there are doubts, but again, at the end, we don't have any detail in our hand. So that's why a disclaimer of opinion will be issued. So this is how I will write an answer for this particular question. Even if some information was available, some procedures were have performed, something was done to say that this is wrong, some details were done, it would have been adverse. Again, see, this is more
Yes, sir.
onto
The
the
same question I have. The same
yes, yes,
question I have asked during when we were discussing this essay.
yes, we discussed that also.
But that is different scenario,
Yeah,
slightly different. In that scenario, auditor has a chance to apply procedure on the projection.
correct. So if I show you, if we go back to our report,
Yes, sir, it's very clear now, sir. Even we
Yeah.
discussed, I think at the SA 500 also in the during the audit evidence also, when there is a limitation due to the external situation, we will give the disclaimer opinion. Even that management is also providing the limitation, not able to go and check any audit evidence. Those cases also we will give that disclaimer opinion we discussed.
Yes. So if I quickly take you through the report, see, here we have a disclaimer of opinion and material uncertainty and unable to comment. This becomes a basis for disclaimer of opinion because at the end they don't have any information to comment upon the matters or issues, whatever there are. If they had some information, some audit evidence, which is pointing otherwise negative or for even adverse opinion, the basis should be evidence available. If you have evidence available which is pointing otherwise, then you can issue adverse opinion. Otherwise, if you don't have any evidence, material, it's going to be disclaimer of opinion. Okay.
Yes, sir. Perfect.
Now, any doubt with respect to any of the question on SA 570? Any doubt?
No, sir.
No, sir.
Okay. Now, if no doubt, let's quickly cover 580 because it's pretty simple. We will cover from this chart itself. Okay. See, written representations. Now, written representations, we all know that it is something where we take from the management. Okay. And there are certain areas where we have to take the written representation from management. Okay. We have discussed in multiple standards, but to summarize, there are standards where we ask, like, we have to ask management, give us a representation that you have fulfilled your responsibility of preparation FS and you have provided complete information in that. Okay. You take written representations from management, those charged with governance, wherever you need or you think it is, it will support your whatever evidence you have gathered. So if you need further evidence or to support your audit evidence that you have obtained, okay, you may take written representations, but alone they are not sufficient. So written representations do provide support, but alone they do not provide sufficient and appropriate audit evidence. So remember, they are for support. They are not to be taken alone as the audit evidence. Number two, when you are taking written representations, when you are, asking management to provide written representations, few things you need to take care. Number one, written. It should be written representation. The name itself should not be oral, it should be written. Okay. Number two, it should be near to the date of audit report, but not after. There is no point obtaining a written representation after the audit report date. That means you did not take the evidence first, now you are covering up. So it should not be after the date of report, auditor's report. It should be before or near to the auditor's report date. Okay. Representations shall be on the financial statement, the periods which are covered in your financial statement. If I obtain a representation for the next year or 2 years before, doesn't make any difference. Like, it's not useful. What is the period of the financial statement? That should be the period specified in the written representation. Now, if you have a doubt on written representation, on reliability of it, because let's say, for example, management gave you representation that I have disclosed all the related parties. Now you identified new related parties which were not disclosed by management. So what is the use of this representation that has been given by management? So you have a doubt on that. In that case, perform additional procedures to resolve the matter. And if you find a representation incorrect, if you find it deliberately provided incorrect, okay, then in that case, evaluate the impact on other representations also. For example, management gave you related party representation, which you thought it's correct, but now you identified it is incorrect, not reliable. In that case, you need to think of its impact on the other representations that have been provided. If management can give me this representation incorrect knowingly, then they can for sure give me other representations incorrect knowingly. That raises questions on the integrity. And you need to decide what should be the approach now. Can you rely on the other representations? Yes, no. If no, what should be the impact on the auditor's report? And accordingly, you need to assess the impact on the opinion. Okay. If management is not providing the representation, again, assess the impact on the opinion. Because there are certain things where management has to represent. For example, fulfilling their responsibility. Management has to give you representation that, okay, they accept their responsibility of preparation financial statement as per this financial reporting framework. Management has to provide a written representation that they have provided you complete information about the related party. Now, if management is not providing you, means there is something wrong. There is some issue. You need to understand that issue and accordingly assess the impact on the opinion. So that is about the written representation. Straightforward, nothing complex, pretty much simple.
Sir, I have one query. On the joint audit, SCA 299, joint audit of financial statement, we discussed about when you are getting that initial audit engagement, we will get the single engagement letters. Like that for the return representation, can we get for joint audit? Is it a single representation letter for joint audit as well?
Yes. So if you see again now, representations can be area wise. For example, if let's say it is they are giving on the related party, they can give a separate representation on the related party, no issue. They can give separate representation for something else. But the point is to whom it should be addressed. Can you should a management address a representation letter to one particular auditor in case of a joint audit? That is not something acceptable as an auditor. Okay, as an auditor, you shouldn't allow that. Why? Reason because what if they are giving you one representation on the related party and to another auditor they are giving some other representation? So representations, whatever they are being given, 1, 2, 3, multiple, they should be addressed to both of the auditors. An auditor should not go and seek separate representations for their area. No, it should be addressed to both of the auditors. If they are seeking separate area wise, still addressed to both of the auditors. Clear?
Clear, sir. Thank you, sir.
Any doubt with SA 580? Pretty much simple. No complexities there in this.
Sir, I have one doubt. Suppose there is a 10 related party based on the other audit plans whatever we have get, and management has given the representation that yes, we have 10 related party only. So for that, whatever they have mentioned 10 in the representation, for that also any they will give any other evidence like how they have evaluated this is 10 only.
Yes. See, generally when they issue a representation, as I said, it is to support the other audit evidence. That means you already have other audit evidence where you have assessed the management's control around the related party, management's process for the identification of the related party. Now, to support that, whatever outcome of that particular, process, control, or audit evidence you have, to support that, you will take a representation.
Okay, sir. Clear.
If I talk about, representations are usually taken near to the end of the audit. I'll tell you why. Let's say I took a representation in the middle of the year. But by the time when I reached at the end of the year, okay, let's say 31st March or after that, management's representation might not hold good. For example, management gave me a representation in the month of October. At that point in time, there were only 10 related parties. What if this related party was added after February, in the month of March? So, when we have a good set of audit evidence, sufficient and appropriate audit evidence, when we have, done our good procedures, audit procedures, now whatever evidence we have gathered, based on to support that, we will take the representations from the management, which is basically near to the end of the audit.
And sir, this representation should be taken only for high risk area. Means, is there any area specified?
Every standard has a specified what representations you should take. Number one. Number two, it is not restricted to high risk areas. If you need a support for your audit evidence, you can take it.
Okay, sir. Clear. Thank you.
But the only condition is alone it is not sufficient. Any other doubt? No? No doubt?
No, sir.
No, sir. Clear.
Okay.
Thank you so much.
So this marks the completion of chapter number 6. Okay. What I want you guys to do is practice as much as you can. Every time I will repeat this, practice, read the chapter. These are the two important things that will really, really help you to understand and to excel on the audit. Okay. Our next lecture is, I think, on today is first. So 6th, Monday. 6th October, Monday, we will be starting with the reporting chapter, chapter number 7. So basically it covers the SA 700 series. 700, 701, 705, 706, 10 and 20, 710, 720. So we will be taking up those standards. Okay. Read the chapter. Rather, I will say read the audit report. Pick up any public annual report. Read the audit report. Now our focus will shift from performing execution to reporting. So we will go through a lot of examples of the audit report which are available in the public domain. We will discuss those reports para by para, point by point, with various examples, and then we will, on the basis of that, we'll understand the requirement of the standards. Okay. So read chapter, practice more, and if you get time, read the audit report. That will really help you here. Okay. If no further doubts, then thank you guys. Thank you for participating in today's session. I will see you in the next. Thank you.
Thank you very much, sir. Thank you very
Happy
much.
Dashera and Gandhi Jayanti.
Same to you, sir. Same to you.
Thank you, sir.
Thank you.
Thank you, sir.
Thank
Happy
you.
New Year and good night, sir. Thank you.
Good night. Yes.